watching Your Money Matters. I'm Mahima Vachrajani here at NDTV Profit. Now, today the very important thing to keep in mind is about your income tax returns. Today is the deadline to file your income tax returns, and this is applicable to individuals and HUFs who are not subject to tax audit. So keep that in mind. So if you are an individual or an HUF who is not subject to tax audit, today 12 a.m. will be the last deadline to file your income tax returns. Now, with regards to how easy it is to file your ITR, of course, you have to go to the income tax portal using your PAN and password. You log in, you navigate through the ITR filing section, select the assessment year, choose the filing status, pick the right ITR form. This is very important. Keep that in mind. If you're confused, always go to a professional. Review and confirm your information. If there's a tax due, pay that, or if there is a refund, then the next course of action for you should be e-verify your return. This is very important. If you don't e-verify your return will be considered as invalid. So do keep in mind that after filing your return, you've e-verified it. Now, what happens if you miss the deadline? Of course, a belated return can be filed with a penalty and a fee as well going forward. And if you've made any mistakes in ITR that you've already filed, you can also file an updated one. Now, with regards to this entire conversation, to discuss as to what should one keep in mind before filing their ITR, we're joined by Amarpal Chadha, who's a tax partner at EVA India, joining us now. Mr. Chadha, hi. Pleasure speaking with you. My first question to you is that, the expectation now for sure is that CBDT is not going to extend the deadline for filing your taxes. I'll start with a very basic question. What are the key things to keep in mind as an individual, a salaried individual, before filing your taxes?
Sure. And Mahima, just before I start, I think you perfectly captured the whole system of normal time filing, belated filing, and updated return. I think that's bare minimum that everybody should know, that what are the clauses. In terms of what you should be careful, see, typically people say just look at the Form 26AS or look at the AIS. If you are a employee who's earning salary, look at the Form 16. Those are basic documents. If you have rental income, look at your lease deed, look at what kind of income or TDS has been deducted. If you have capital gains, look at the documentation underlying. I think I'll add one more layer to that, which would really help the taxpayers, is to look at your bank statement. Look at all the credits, and I'm not worried about debits. I'm sure you have enough control on your debits, but all income credits into your bank account, every credit should have an explanation. It's very difficult to sit at the end of the year, and now we are 6 months down the year of the closure also. So going back 15, 18 months and remembering, but I think that's the basic thing. If you can explain every credit in your return, whether that's an exempt income, whether it's a gift from somebody, whether it's just a transfer or a refund of your Amazon purchase, you should know every credit in your bank statement. And a simple tip to do that is have an Excel sheet and just keep a record of at least credits above a certain amount into your bank statement. I've seen people struggling with that one once the notice comes. I'm a longer answer, but I just wanted to bring that perspective.
No, and that is very important, Mr. Chadha, because, when I was also filing my ITR, when I got to the AIS portal, I realized that as to very small amounts of TDS were deducted on, maybe income received from REITs or something like that. But it is very important to have that check as well, right? So that's a very important piece of information that Mr. Chadha just gave. Apart from that, I think there are very common mistakes that a person generally makes while filing his or her ITR if they're filing by themselves. What are these mistakes that you generally see, and how can one keep in mind so that they don't get any notices?
Yeah, I think 2, 3 very simple ones. One, if you have stock options and if you are working in an MNC, those stock options or shares of a foreign company are foreign assets, which require a separate disclosure. There is a requirement to disclose transactions which are done overseas. So all of that, there is also now, if you know, there is a deduction on tax collection at source when you spend overseas. So look at not only income. I think that's generally what I see. People forget about other things that are required to be reported in the return. The second aspect could be if you are married and you have joint income, joint accounts, who's disclosing what? I've seen friends who have properties in both names. Both have paid some money, but one is offering the income to tax because one is in the lower tax slab. All this is like recipe to get into trouble. So my suggestion is to look at each of your income streams, see whose hand it should be taxed in. And the third could be also around clubbing of income. So if you have children, they are earning income, you've opened their bank accounts, and you're not paying tax on that, all of that can get you in trouble. You need to track the bank accounts. Obviously, there is a threshold limit without below which all income is not taxable. But the fact that there are clubbing provisions for transfer of income to children, to wife, to other relatives, you have to be careful of all of that. So hence, don't simply say I have income that's coming in my Form 26AS in my AIS and I'll stick to it. I know, Mahima, we all love it when we log into the income tax website, see the income there, just click file the return. That's the easiest thing to do, isn't it?
Absolutely, absolutely. And, keeping that in mind, the other aspect that, I was reading a headline recently that around 1,300 crore worth of fake donation deductions were detected by the IT department. So I think your message to the viewers will be very important, because there are a lot of salaried individuals out there who are going ahead and filing deductions under that 80GGC section when they've actually not made the donation, or probably not in the right channel as well. Your view with regards to this?
Yeah, so any exemption, whether it's donation, whether it's an HRA, which is actually not being paid but just being transferred to a parent, there is no lease deed behind it. All of those, I would say, first, principally, you should not be doing it. If you have been doing it in the past, I think time is over. There is enough systems, technology, databases available now to track end utilization of the funds, and whether the income is being offered to tax by the other recipient of those amounts or not, through tax returns, through the interlock with the banks, reporting transactions. So for your own safety, I would say just stop any of this that you see. I feel if you've done that in the past years, make a fresh beginning. Just it's not possible, one, principally, and second, by system now to do any of these things. I would encourage you not to go this path, because it will lead you to a lot of anxiety and trouble for future.
And correct me if I'm wrong here. Now the income tax department also has softwares which detect these kind of fake deductions claimed or mistakes made. Is that correct?
You are correct. And also, Mahima, you and me may know of some softwares which are available. I'm sure if somebody's checking, they would have some tricks up the sleeve too. So
Absolutely, that's correct. The other aspect, Mr. Chadda, is because the Gen Z today, or the new generation, is going ahead and investing or trading in the digital assets, cryptocurrencies per se. Anything that you would want to tell them with regards to what should be kept in mind while filing your ITRs on gains which have been made on cryptocurrency or trading of digital assets?
I think there are specific columns for disclosure of virtual digital assets. Please use those. Please report the right income. Also, sometimes it's very difficult to even know whether you have income or not. So please look at your statement at the year end and see, like your stock statement, see if you've made any switches, if you've sold any of them, converted to others, and see the net gains. It all needs to be reported, no exceptions. Anyway, virtual digital assets is an evolving field with our tax laws also. So reporting considerations, and anyway, at the first stage, investing in a crypto is a personal call to be made with knowledge. And I think there are enough measures being taken to educate investors on the whole virtual digital assets. So keep all of that in mind. And if you are dealing with crypto or any virtual such assets, there are more in the pipeline, be careful that there is a reporting requirement. You may not make enough gains, but if you miss reporting them, you will end up paying interest, taxes, also have some level of penalties coming your way, and the hassle of reporting, replying back. So please weigh in all of these decisions when you make any investment.
Okay. Mr. Chadda, one last question to you with regards to where penalties stand. If one fails to file their ITR today, what is the penalty that we are looking at, and of course timelines for a belated return?
Yeah, so the timeline now, if you don't do it today, you can do it till 31st December 2025.
Okay.
So you have additional months to do it. If your income is above 5 lakhs, the fee that is you need to pay is 5,000 rupees. So it's only 5,000 rupees if that amount seems okay to you. If your income is below 5 lakhs, then it is 1,000 rupees. So you still have time. It's not that this is the death knell and after this you can't revise your return or you can't file a belated. You can always file a belated. You will also get an opportunity to update a return, but there the penalties are much higher because those are computed based on tax payable.
Correct.
So if you forget to file and you use the updated window, which is available for next 2 years from the end of the assessment year, but those come with a huge penalty. So my suggestion would be it's either now, today, or take a call of 5,000 or 1,000 rupees and file before 31st December.
And there are certain caveats as well, right? If you file a belated returns, you will not be able to do certain things that you were allowed to do in the timeline specifically. What are those items?
Typically, it's about losses because the losses cannot be carried forward. Only there are certain exceptions like a house property loss which you can carry forward, but other losses lapse. So if you are planning to file a loss return, you have a huge capital gains loss or you sold a property, you're sitting on a big loss, all of those you should do before 15 September. See, anyway, Mahima, all this discussion about last date, we knew from April 1 we have to file this, isn't it?
Correct.
Yes, there are technology problems. There are other, some people have also told that due to the current situation on rains and floods in certain areas, there should be exceptions created. But again, I think the onus lies on the individual. We cannot for sure say that nobody is in a situation that they can't file a return. There will always be exceptions.
Absolutely, Mr. Chadha. And that sums it up well. Thank you so much for taking out the time and speaking with us at NDTV Profit and giving us those insights with regards to where ITR is concerned.
You're most welcome, Mahima. Thank you.